Happy Tuesday out there, folks. This is Darius Dale here to present our macro minute for Tuesday, June 28th, 2022. Starting with markets, we got stocks up, commodities up, crypto up, dollar up, global bond yields up. You know what our friend Cardi B says? If it's up, then it's up. Market moving headlines, not so dovish after all. The ECB will activate the bond purchasing firepower earmarked as a first line of defense against a possible debt market crisis on Friday by applying flexibility to PEPP reinvestments. That's their former quantitative easing program. Meanwhile, Reuters reported that the central bank's new anti-fragmentation tool, when we say anti-fragmentation, what they mean by is sort of capping peripheral versus core spreads. So think Italy yields relative to German Bund yields. That tool will probably drain cash from the banking system to offset any bond buying. So it's on a net basis, it's likely to be neutral from the perspective of policy. So that's obviously somewhat positive for the euro relative to expectations that the ECB was not going to be serious in combating all-time high inflation readings and pressures abroad. All bark, no bite. Still looking back at this G7 G7 leaders meeting. So more headlines coming out of there says countries will temporarily allow some public financing of fossil fuel projects to help address the energy crisis in Europe as Europe tries to wean itself off of Russian gas. Leaders will also instruct ministers to look into a price cap on Russian supply. How in the hell are they going to get that done? Anyway, and they also condemned a Russian strike on a shopping mall in Ukraine that left at least 18 people dead and dozens injured. More cries of war crimes, less doing anything about that. So as we continue to see, where we're probably headed here is eventually we're going to get to a place this winter where Russia says, you know what, turning off the gas. I'm shutting down the studio like Diddy. I'm shutting down the studio. The only way I'm going to turn the studio back on is if you walk to northern New Jersey and take a picture with a star person holding these balloons. I hope my millennials get that joke. China easing COVID curbs. China cut its quarantine requirements. So you can have a little fun on the program. It doesn't have to all be serious. China cut its quarantine requirement for travelers for 2 weeks to 7 days, state TV said, after Beijing and Shanghai recorded no new infections for the first time since mid-February. That is positive. There were only 22 cases reported nationwide yesterday. I don't believe that one bit. There's a 1.something billion people in China, but we'll take it for what it is because it's positive at the margin and in the sense that we're going to continue to see a rolling back of COVID curbs in China. That's positive for the growth outlook there. Big movers, 10-year German Bund yield up 10 basis points on this PEP news in terms of the net of it all in terms of draining cash in the banking system to offset that additional bond buying. 10 basis points up 69 basis points month over month there. And then you have 1 year, 1 month Euro overnight index swap forward rates up 12 basis points to 2.07%. That's up 72 basis points month over month. So the market is incrementally pricing in more hawkish ECB policy relative to where we were prior to today's speculation, prior to today's commentary out of Christine Lagarde. Shifting gears to our volatility adjusted momentum signals and probable ranges. US dollar, that is still bullish FAMS, still pretty much in the middle of its probable range. Gold bearish FAMS, same setup there. 10-year nominal treasury yield bullish FAMS. Sort of in the middle of its probable range, bouncing off towards the lower boundary recently. High yield credit spreads, bullish FAMS, getting towards the lower boundary of its probable range, only 16 basis points of downside with 75 basis points of upside. S&P 500 bearish FAMS getting nearly overbought, 0.4%. I wouldn't be too impatient here. We still got month end coming up in a couple days. You got these rebalancing flows, et cetera, and maybe we push beyond the upper boundary probable range, kind of like what we saw in early April. But if you didn't get our sell signal from early April, you're probably regretting not paying for that research. Anyway, VIX neutral signal still in the middle of its probable range there. NASDAQ 100 bearish FAMS at the upper boundary of its probable range. But again, I would give it a couple days here to just let that play out. Russell 2000 bearish FAMS, same setup as the S&P and NASDAQ. Bitcoin bearish FAMS getting nearly overbought here. I mean, this is a new development. I haven't seen an overbought signal in Bitcoin since going back to, I want to say late May. And we know how that ended. Got an overbought signal here in early April as well. Know how that ended. Early bought signal here in overbought signal in early November. Know how that ended. We know how these things end. They usually don't end well when the volatility adjusted momentum signal is bearish FAMS. Product of 42 macro there. Ethereum, bearish FAMS still even more closely overbought than Bitcoin, 4% upside versus 33% downside. Bitcoin's got 6% upside versus 20% downside. Shanghai Composite neutral FAMS, that is officially overbought. This thing, I mean, holy moly. Look at this chart. what COVID, right? Anyway, the WTI crude oil bullish fams, no longer deeply oversold. You got 2% of downside versus 14% of upside there. Agricultural, that is still oversold here, deeply oversold, if I may say. Industrial metals, bearish fams, also deeply oversold, but yeah, that's what you would expect given the mounting concerns to the global growth cycle. Global growth cycle downturn paired up with the global liquidity cycle downturn. Not what you want if you're buying dips here. Cheers.